Welcome back, everyone. It is Michael here with Offshore Citizen. Today I'm going to talk to you about the 4 biggest myths around Bitcoin and whether you should be investing in it. So stay tuned. All right. So Bitcoin is something that has tended to have an extremely emotional response. It's crazy to me that people will name their screen name on various different channels on Twitter, etc., something to do with Bitcoin or crypto, something like this. Like their identity seems to get locked into it. People feel so passionately about this thing as opposed to just viewing it like another commodity or asset, etc. So, depending on how you want to look at it, I view it as something that is a tool that you can invest in. And, then the question is, great, how do you do that in such a way that is going to be beneficial to you? But today, I'm going to expose what I consider to be 4 of the biggest myths that people have about Bitcoin. It's kind of some contrarian thinking. I think it's the best way to approach things is to challenge some of the existing assumptions, hopefully give us some better insights, and to go from there. So let's get right into it. The first myth about Bitcoin that we're going to discuss is the idea that Bitcoin's value comes from its scarcity. Okay, so Bitcoin is it is the first scarce digital asset, digital resource, whatever you want to call it. It's like a digital commodity, and this is very abnormal because in a world of abundance economics where you have electronic transactions, etc., bits can just be duplicated a gazillion times. Bitcoin cannot, and people will argue that that is where the value comes from. This is a myth because it conflates 2 different principles, right? The one is that, hey, because something is abundant, it doesn't have value. Even that in itself is questionable, but arguably as you increase the abundance of something to infinity, the value of it goes to 0, okay? So but the flip side is just because something has scarcity does not give it value. Okay, so these 2 ideas that seem to get mixed up in people's heads, and you see this quite often, right? It's kind of like the idea how a square is a rectangle, but a rectangle is not a square. So similar sort of concept here, right? You've got 2 ideas that can coexist without being mutually exclusive, which is, hey, if it is infinitely abundant, it has no value, but if it's scarce, that doesn't give it value. Okay, so that's the idea here. And this is a really easy myth to bust because you can just pay attention to other things that are scarce in the world and see if they intrinsically have value. And the answer is they do not. So for example, take the artwork that your 2-year-old child may make. It's very scarce, there's not a lot of it out there, and it is worth very close to 0. They can produce 1,000 of those, they can produce 10 of them, you can go and you can have a few of them burned, so there's less of them. It does not matter. The value of that is typically very close to 0. It might be valuable to you, but in the marketplace, it is not valuable. And we can go across the board and see this. We can see that, the work of various artists, okay, many artists out there, and their work is in theory equally scarce, more or less, right? In fact, sometimes you have people like Van Gogh, who was tremendously prolific, right? He was producing, I think it was like a piece of artwork practically every day towards the end of his career, and yet his works are worth much more than a lot of people who have a smaller body of work. So scarcity does not drive value, okay? That's just not the way that it works. Now, and by scarcity, I mean scarcity of supply, right? So what does drive value primarily, it's the supply-demand relationship. So without the demand, there is no value. So what we've seen is Bitcoin's price has gone up, its market cap has gone up as more and more people have become aware of it, as more and more people have adopted it, as more and more people have started to invest in it. So it's a primarily demand side. Because you have scarcity, it's primarily demand side, okay? So if it wasn't scarce, then supply and demand should, basically balance each other out. In this case, it's scarce, so if you have increasingly rising demand, then of course you're going to have a corresponding price increase. Okay, so that's our first myth. Now, the second myth that comes out of this is the idea that Bitcoin halvings drive prices up. And if you subscribe to the channel, you'll see there's another video that I don't know if it's been posted yet, but either it will be posted or it was posted, and you can go and check it out, where I talk specifically about halvings, what they are, how they work, what effect they have had in prices in the past, what effect we will likely see on them in the future, and so on and so forth. But there's this idea amongst a lot of the community that says, hey, halvings make the price go up. Now, this one's a little bit tougher to argue because we have seen within 9 to 18 months following the previous two halvings, it's May 12th today, so the third halving just happened, you've seen the price go up. And so, they can say, hey, there's a high degree of correlation, there was a halving, then there was a price increase, but it's hard to correlate based on that timing. If you have to control for all these other variables. And if you do that, what is the actual result, right? Is it really the halving that caused that, or is it something else? And this is, another common misconception within thinking, which is confusing correlation for causation. Okay, so you say, hey, these two things correlate. Well, if you have a very small data set, then correlation doesn't really mean that much. Whereas causation is much more significant, right? So, a simple example might be if I say, okay, well, I happen to, when the sun comes up, I tend to wake up, right? Or I tend to wake up with the sun. It's actually not true. The sun goes up way before I wake up most of the time, but let's just say that was true, right? So you can say, well, does the sun cause you to wake up? It's like, no, the two correlate, right? But in reality, your body being sufficiently rested, you could say, hey, the increases in cortisol levels in your body tend to wake you, your alarm clock wakes you up, things like this wake you up. That's the causal relationship. There's a correlation, and there might be a reason for that correlation. There might be, you might be able to use that correlation to predict the future fairly effectively. It's not to say that correlations are not useless. They're tremendously useful, but a correlation is not a causation. And so the idea that halvings cause Bitcoin price increases is, in my view, utter nonsense. It's a total myth. You shouldn't think of it that way. You should look at, in fact, I don't even know that over time it's going to correlate. And the reason that we have this, so this is kind of the last part of this one, is we can look at many other coins, right? We can say, hey, listen, many other coins are resulting in, they've gone through halvings, and we haven't seen these price increases. So why should it be abnormal that they wouldn't go through it, but Bitcoin would, right? So we don't seem to see, when we look at the body of data around halvings, because again, there's many, many different crypto coins out there, and many of them have halvings built into them. That's just not what we see, okay? So that's the second thing is, hey, look, this is not in fact what happens. All right, what's the third myth that we're gonna talk about? The third myth is the idea that Bitcoin is a store of value. Okay, so this is an interesting one, and again, it's one that I think is it's a little more challenging to argue. You saw just a couple days ago, Paul Tudor Jones ended up having he invested something like 2% of his portfolio. I'm just going to pull up some information here. So 2% of his portfolio approximately into Bitcoin, and he made some statement that we're observing the creation of a new store of value or something like this. And there are some people who speculate that Bitcoin will become a store of value. Now, at this point in time, it's not a good store of value if it is a store of value. Okay, so if you want to make the argument that it is a store of value, it's not a good one. Why is that? Well, because the price is highly volatile, right? The US dollar is a far better store of value than Bitcoin is. Gold is a far better store of value than Bitcoin is. So I'm making the argument, and again, if you subscribe to the channel, go and check out some of our other videos where I kind of make an explanation for why it is that I will argue that Bitcoin is not and will not be a store of value. Okay, it doesn't. There's some underlying dynamics of it that do not result in that. Now, does that mean it's a bad speculation? No, of course not. Now, I happen to hold Bitcoin right now. I think that it's a good speculation to make. I think that Paul Tudor Jones can be wrong about the idea of it being a store of value, and he can still make a lot of money, which is a really important point, right? So a lot of people they try to conflate these two things, that, hey, look, for Bitcoin to go up a lot, it has to be a store of value. No, it doesn't. That's not accurate at all. Tulips were never a store of value, and tulips went way up. Okay, that's the way that it goes. Enron was not a store of value, it went way up. Enron wasn't a profitable company, and it went way up. And of course, I'm using examples of things that are going to go down because my argument is that in the very long term, we're talking about 10 to 30 years, it's hard to say what period of time, I think there's a reasonable likelihood that Bitcoin will get outcompeted. There will be a better digital technology that will emerge. It will serve as the things that Bitcoin does well as the things that it doesn't do well, and the result will be that interest in Bitcoin will erode. And this comes back to understanding the supply-demand part, right? That Bitcoin's price is primarily demand-driven, and so if the demand drops off, you're going to have a huge issue. So that's our third myth, right? Our fourth myth is the idea that Bitcoin price stability will come or comes from a greater degree of utilization, okay? That trading volume increases price stability. This is another important myth. And again, this comes into why it is that in the short term and the midterm, maybe you can do well with Bitcoin, but it's going to erode some of the underlying problems or some of the underlying fundamentals of it. Okay, so if you just think, in order for Bitcoin to be functional as a store of value or as a method of transaction, it needs to have price stability. Okay, there's been an argument that, of course, Bitcoin has been highly volatile, right? I mean, literally doing a 70 to 90% drawdown is not abnormal in Bitcoin in a very short period of time. It can spike up. Literally, we saw 20x in 2017 up, and then a drop down by whatever that was, about 70%, right? And in fact, greater than that if you kind of go peak to trough. So horrible from that standpoint. And so what the proponents of Bitcoin will tell you is they will say, hey, listen, it's okay. It's an early stage digital asset. It's going to take some time to get stability, and that stability will work itself out. Now, this is not really borne out, and it will do that because of the volume, right? The volume will ease these things out. And there's a certain amount of truth to the fact that when you have a very small float, okay, so when you have any asset, you've got the market cap and you've got the float. The float is the part that's actively being traded. So a lot of Bitcoin is not actively traded. People are just sitting holding it, right? The part that is being traded can be manipulated. If there's a very small amount of it, it can fluctuate very dramatically, okay? It's easier for that to happen than if there's a large amount, because of the fact that you need to put in a lot more money in order to make it go up, and vice versa, okay? Fair enough. So that eases it up a bit, but not nearly enough. And how do we tell that? Well, look at the trading volume for something like oil, okay? Billions of dollars of oil are traded. There's an enormous trading volume of oil. And yet oil is enormously volatile. I have a guy who trades crypto for me. And the other day when oil went from like whatever it was, $18 a barrel down to negative $35 for WTI, he's like, man, I thought Bitcoin was volatile. Then oil comes along and is like, hold my beer. Like, just insanity in terms of the volatility that you can see. And you can get into why this is. I don't think that's especially important. The important thing to note is that it is not true. It's a myth that the volatility will go away due to volume. What will cause it to go away? Okay, the thing that provides consistency is when there's fixed rate exchangeability for many things that have tangible value. So why the US dollar, for example, has a lot of price stability is because there's so many things that are denominated in US dollars that you can trade for. So if the price of the US dollar went way up, right, what would happen is people would turn around, they would sell goods in order to get US dollars, and that would rebalance it, right? On the flip side, if the US dollar went way down, then people would go and they would buy a whole bunch of goods in that place. And we see this with a measure called PPP, purchasing power parity. And it's one of the reasons why when a currency dumps very rapidly, such as I was in Turkey it was fall of 2018, and the Turkish lira had just taken this massive jump. You could go and you could buy things for quite cheap. Well, a little while later, you couldn't do it so much anymore, right? Because it kind of re-equalizes. So either the price of the goods are either going to get repriced, or the currency is going to get repriced in order to bring that into balance. And so what will ultimately give Bitcoin stability, if they can get there, and my argument is it won't get there, is when there's exchangeability, when things are priced in terms of Bitcoin. Because then you can say, hey, look, that house, I know what I can sell it for in US dollars, but the currency, the Bitcoin value has changed so much that I can do this buying and selling. And you can best see that with debt, right? If you're saying, hey, look, I can buy my house, and let's say my mortgage is denominated in Bitcoin. Well, if the price of Bitcoin drops in half, I'm going to pay off my mortgage because I can go and I can get the house basically for half the price. And if it turns out it doubles, I just paid twice as much for the house. So as soon as you start to get that exchangeability, you end up in a situation where you get much more price stability. The reason why you see more price stability in gold is because gold has a real tangible demand for jewelry and for industrial purposes. Okay, so again, you have a similar sort of factor, and so there's hedging that goes on and so on and so forth. So anyway, that hopefully will give you a little bit of an idea of these myths about Bitcoin. And so then the question out of those becomes, well, what should I do? Is it too late to invest? Should I have invested back in the day before the speculation came in, etc.? What's the deal here? Well, if we look right now on a risk to reward basis of Bitcoin, okay, just meaning how much can it reasonably fall? In other words, will the demand, remember I mentioned that primarily Bitcoin is demand driven, okay, the Bitcoin price is demand driven. Will the demand drop off dramatically anytime in the next little while? Probably not, right? So my argument is settling down around $6,000 a Bitcoin would not be an unreasonable thing. If it was to go to $4,000 a Bitcoin, no particular, like it could do that, right? But there's kind of this point of reasonableness. You have enough believers who are in the system. You have enough institutions who are in. There's enough vested interest to be able to do that. The biggest problem right now, I think, with Bitcoin is what I would call on and off ramps. So it's difficult to get into and out of Bitcoin, in part because the banking system has restricted the access. So we deal with people all the time, and if you're interested, you can contact us for, how do I have bank accounts? Maybe I want to have brokerage buying and selling Bitcoin for people. Okay, that's one thing. Somebody wants to buy it, they don't know how to get it, it's not easy. Okay, let's do this. Bitcoin ATMs, you've got people who want to, again, just be able to transact with exchanges, and often they'll close your bank account if you're in a situation that you try and send transfers to or receive transfers from a Bitcoin exchange, especially some of the less reputable ones, maybe Coinbase and ones like this, you can get away with a little bit more. It's a big problem for a lot of people who want to do this. And so in order to make it easier, you want to have a lot more on and off ramps onto Bitcoin and into cryptocurrency in general. Okay, so that is certainly a deficiency in the system, and it's a big problem because it's a regulatory hurdle. It's something that's being kind of repressed a little bit indirectly by government through anti-money laundering and know your client rules. So makes banks uncertain and wary, etc. So that problem is going to have to be addressed. It's probably going. So here's kind of the bullish case, right? Is increasingly, although this won't allow you to transact very easily, there are banks that are being allowed. There was a case or some new piece of legislation in Germany a little while back that allowed German banks to basically act as purchasers and custodians. So for if their clients want to buy Bitcoin, okay, that's a big thing. We're seeing something similar in Canada. What we're probably, you can look at Revolut, you can do this. So what you're probably going to see is Bitcoin enter into an environment where it's much more like a traditional stock brokerage, right? Which is when I have stocks, I can't just send you stocks. I can't transact with you in stocks. What I can do is I can buy those stocks and I can sell them within my brokerage. Sometimes I can transfer from one brokerage to another. It's quite a hassle, right? And it's always going to stay within my name. You're probably going to see a lot more of that. You're going to see the on and off ramps will allow people to invest in cryptocurrencies, invest in Bitcoin, but they will not allow you to send Bitcoin to somebody else. That's going to be kind of a separate thing. And as that happens, as these on and off ramps come on board, as you start to see more institutional investors, as you see more pension funds, etc., what are they going to do? They're going to be seeking return. And right now there's virtually no upside in the stock market. There's virtually no upside in bonds. Where are you going to go? Well, cryptocurrency is increasingly an attractive area, and there's going to be an incentive for big institutions to enable people to do that. When they do, it's primarily demand driven. Like I said, they're going to have more demand. The price is likely to rise. You're going to see that over the next while. So I think that on a risk reward basis, it makes a ton of sense to be holding some Bitcoin as part of your portfolio. I was helping a client with kind of designing portfolio the other day, and we were saying kind of 10% of their portfolio. Some people were arguing as high as 25%. It depends a little bit on your situation, so don't take it as a one size fits all. There is no one size fits all in investing, but just on that basis, I think that it's a reasonable option for now. We'll see what the price does over time and adjust accordingly. So anyway, I hope that's helpful. If you have questions, if you'd like to get some advice about, hey, where can you bank with respect to Bitcoin? What are great ways to deal with the tax implications of Bitcoin? What is it in terms of, how can you buy Bitcoin? How should you be formulating your portfolio, etc.? You'd like to talk to somebody, reach out to us. You can book a call with us. You can go to clarity.fm/Michael Rosmer. You can go to offshorecapitalist.com, offshorecitizen.net. So I hope that helps. Subscribe to the channel. Tell me if you think I'm totally off base about these myths. Write it in the comments, like the video, share it, and I will see you guys on the next video.